Hi, Tony. Vaughan. We're here for the market update for July. Vaughan, can you give us an update on what they were discussing in the markets over that June period?
Hi Jordan, hi Tony. Yeah, we've experienced another positive month in markets, albeit some global tensions have had, between US and China, we had some global trade tensions which have had limited impact on Australian resource exporters so far. I think the main surprise domestically this week was that rates have held steady despite some weak GDP and employment data. So the market was broadly anticipating that we would get another rate cut, which didn't happen. And the RBA seems to be the consensus within the RBA is that rates are going to continue to move down, but they wanted to wait until we had quarterly inflation data support that view as well. So it seems as though August is going to be the next rate cut there. So that was a slight surprise to markets, but generally things have been relatively strong since we had quite a sharp drawdown in April, and since mid-April markets have continued to track back upwards to the point where today, we're seeing all-time highs in the Nasdaq Composite and the S&P 500, Bitcoin even, and the Aussie All Ords are close to all-time highs as well. There's still definitely opportunities in the market, but things are trading relatively high. And this Boxing Day sale, as we say, that occurred in March and April, it certainly was just that because, things have bounced back 15 to 20% already in the space of 2 or 3 months since then. So, yeah, there's a few other things that we've been looking at in the markets at the moment, and we had our investment committee meeting with Evergreen yesterday. There's a few sort of things that we're looking at in terms of our global mid-cap funds.
Just going to get to talk about that if you're happy.
Yeah, please go for it.
Just about the changes we were looking in the mid-cap.
If I can just touch on, we are looking at some changes in the mid-cap at the moment. So we had a magnificent run with the Magnificent 7, as all of our clients are well aware of. We lowered the exposure to that market pretty much going on 12 months ago. And we've had a really tremendous run in 2 of the mid-cap funds that we chose, a US-style mid-cap fund, which is run out of here in Australia called Aurorus. We've had that since December. That's had a tremendous 6-month period. And Cooper's a bit slow to start, but it's actually been our star international performer for the last 12 months to the 30th of June, Cooper's investments. So we are doing a bit of research at the moment on a couple of other mid-cap managers to be able to bring in just at the moment that aren't necessarily just US-based. And yeah, it's been a tremendous run with that. The move was good. And looking at our interim and not finalised 30 June performance is in our 6 funds have all been absolutely magnificent and certainly outshot the index, ranging from upwards of 15% net fees for our 90-10 funds ESG, with our balanced funds still performing well into the double digits as well. So the overall performance of the portfolio with some of those changes that have been made has been very successful. And Vaughan, last month you touched on one of the changes that we made in switching one of the Australian managers that we had been watching for quite some time and transferring to beta shares, and that has had an absolute stellar month. You might want to touch on that.
Yeah, that change became a bit of a necessity after we had, kept an eye on DNR for quite a while there. And we spoke last time about the CBA issue that exists in the ASX at the moment. So, just even having a slightly greater exposure to CBA and through that ETF has straight away made an impact. And of course, with any, concentrated, high conviction managed fund, you are going to have periods of under or over performance based on, it not being benchmark aware. So that is normal, but we've seen an immediate impact from that change we've made. Just touching on the global equities and what we're actually looking at with a few of those mid-cap changes. When we talk about global equities, straight away you think of the US, and particularly the top 7 stocks being the Magnificent 7, the mega tech companies, which do take up such a large portion of the index, so 30% of the index of the whole S&P 500 we're talking. But one of the things that we've been considering recently and that we talked about yesterday in the investment committee was more around which regional exposures do we want from these mid-cap managers, because once you actually filter out a few of those top companies, you get to the 8th and 9th company, you're already at the 35th percentile of the whole index. And that's just talking the S&P 500. We're looking beyond that and saying, okay, when we're comparing Coopers to some other funds like the Munro and the Bell that we've been talking about, what other regional exposures do we view as having a good growth opportunity over the next 12, 24 months and beyond. And so that's where Europe becomes a conversation, Japan, and other developed markets. So we don't have any exposure to emerging markets at the moment. It is something that
we do have very limited exposure through a couple of our funds like Qual, but it's very, very limited. It's not worth talking about, but there is some limited exposure.
Yeah. The indirect exposure. Yeah, we don't have any allocation to an emerging market fund, which is something we have discussed previously. We've looked at India, but at the moment we're not going to go down that path. We're more thinking of, okay, what global equity manager is going to have the right amount of exposure to Japan or Europe or other areas that are kind of outside this really concentrated NVIDIA, Microsoft, Google, Apple, which we still like, by the way, but other opportunities do exist as well. So that's one of the things we were discussing yesterday.
Yeah. One of the things we also discussed was the derivatives are coming out 27th of July. Is that correct?
The distributions for the ETFs, yeah. So a lot of the ETFs that we're in, and this is why sometimes end of financial year reporting can take a little bit longer, is just that quite a few of those ETFs, particularly the VanEck ones that a lot of our clients have held for quite a long time now, and they'd be aware that, for example, Moat, Qual, NDQ, and those sort of ETFs, the distributions are paid. They're declared on the 30th of June, but they're actually paid until mid to late July. So I'm sure some of our clients will see them coming in, and then within the SMA they'll be automatically reinvested. But that does happen around this time of year, particularly with some of for Moat, for example, which most of our clients would be pretty familiar with for a very long time now. That typically pays pretty high dividend yields. I think we're looking at another 6% that this year is going to be paid out. So, that's a pretty decent return on a US ETF that's holding 50 stocks as a growth ETF, but then a 6% dividend on top. It certainly smooths things out, that's for sure.
That's one of the reasons why I was saying the interim performance to the 30th of June, but we haven't been able to close it off until we know what all those dividends are paid through.
The next investment committee, we're looking to possibly make some changes depending on the quality versus value analysis that they'll be doing. Tony, I believe you won't be here for the next investment committee, is that correct?
That's correct. In the next investment committee, I will be touring some of those investment opportunities throughout Europe.
No.
A couple of those wineries we might have an interest in, Jordan. And she's the 15th of August, isn't it? So, yeah, I'll still be in Poland.
Yeah.
At that time. So, no, looking forward to that. But we are looking at the one after that of potentially having it open to our clients as well in the September investment committee meeting. So we have had meetings open for our clients before. So we are just looking for a guest speaker that we're comfortable with at the moment in respect to where things are going, somebody who does manage some of the funds, and I'll be speaking to some of them and having that open for a webinar to our clients to be able to log into.
Yeah. Cool. And one of the managers that I'm hoping that we can get a hold of is the managers of Atlas Infrastructure, and they're actually from London, but they do have some Sydney offices as well, and they're one of the funds that have had a really good period after quite a infrastructure had a tough old run of it, but we did actually stick with them in our SMA exposure, and the last 12 months have been exceptional. And they are one fund that is quite concentrated in that they don't have a very large number of stocks, and they do have a lot of European companies, and European infrastructure stocks took a pretty decent hit in 22 and 23, but 24 and beyond has been really strong. So I think it'd be really interesting.
It's actually the US infrastructure stocks that got hit, especially the California-based ones during the wildfires.
That's right.
Even though the actual companies they owned, there was no damage, people did panic and sold off, and it looked as though that sell-off was completely overcooked. And as a result, we've seen a really strong comeback from Atlas as a result.
Yeah, that's right. So, I'd be keen to hear some of their thoughts on the market, but that will possibly be on the next investment committee meeting.
Cool. Thanks, Tony. Thanks, Vaughan.
Thank you, Jordan. Thank you, Vaughan.
Thanks, Jordan. Thanks, Tony. Thanks, guys.